G'day everyone. It's Thursday, November the 6th, 2025, and here I am, right here in the beating heart of Melbourne, where the Yarra River keeps rolling on and the crypto energy is surging stronger than a double shot espresso on a hectic morning. You know, my journey into this space wasn't some overnight revelation. It started in the early days around 2017 when I was just an ordinary guy eyeing this thing called Bitcoin with a mix of curiosity and doubt. I thought, is this really digital gold or just another tech hype train? But then I took the plunge, set up my first wallet, mined a handful of Satoshis on an old laptop that barely held together, and rode the waves on that epic bull run followed by the gut-wrenching crashes. Those experiences weren't just about numbers on a screen, they reshaped how I see the world. Bitcoin and crypto aren't mere investments. They're a full-blown revolution against an outdated financial system that's rigged for a few, leaving the rest of us scrambling. It's about empowerment, giving everyday Aussies like you and me the tools to control our own wealth, bypass the gatekeepers, and build something lasting without relying on the banks that charge an arm and a leg for basic services. Today, with headlines screaming about BlackRock's bold move into the Australian market with their spot Bitcoin ETF and BTC taking a noticeable dip below that key 154,000 threshold, my passion is burning brighter than ever. Did you notice that? Passion? My passion is burning brighter than ever. This isn't gambling, it's a dawn of a new era where finance becomes borderless, inclusive, and truly democratic. Crypto has the power to transform economies, enable instant global transactions, and even tackle issues like financial inequality head on. Over the next few minutes, we're going to unpack all the latest developments, share some laughs, dive into detailed analysis, and explore how you can navigate this exciting yet unpredictable landscape. What's firing you up in crypto right now? Drop it in the comments. Let's turn this into a real conversation and grow our community together. So guys, buckle up. Welcome to today's daily Bitcoin and cryptocurrency update. And let's get into it. All right, mates. Before we plunge into the depth of today's news and trends, let's inject a bit of levity because, let's face it, crypto can be as wild and unpredictable as Australian weather, sunny one minute, storming the next. If there's one thing this space has taught me, it's that a good laugh can help you weather any market dip. So, here's a brand new one tailored just for you today. Why did BlackRock's Bitcoin ETF decide to hop straight into the Australian market? Because it heard down under is where all the real room for growth is. And with those low fees, it's already jumping ahead of the pack. But doom. All right. That one's got a bit of Aussie flavour for you locals. But if you're tuning from elsewhere, imagine a wallaby trying to short sell Ethereum during a bull run. Hilarious, right? Well, now I want to hear from you. What's your top crypto pun or joke? Share it in the comments. And the funniest one might just get a special mention in our next video. Let's keep the vibes light as we roll into the serious stuff, guys. All right. Let's kick things off by zeroing in on what's happening right here in our backyard, because honestly, the Australian crypto scene is evolving at a pace that's nothing short of exhilarating. From bustling street of Melbourne to the sunny shores of Sydney and beyond, we're witnessing developments that are not only shaping local markets, but also positioning Australia as a key player on the global stage. At the forefront today is BlackRock's highly anticipated entry into the ASX with their iShares Bitcoin Spot ETF slated for a mid-November launch. This isn't just another product, with BlackRock managing over 10 trillion in assets globally. Their move here is like a titan stepping into the ring. The ETF comes with a competitive 0.39% management fee, which undercuts some of the existing local options and could attract a flood of institutional money. Compare that to current players like VanEck, Monochrome and Digital X, which are collectively holding between 150 million to 300 million in assets. BlackRock's arrival could easily multiply those figures by drawing in superannuation funds and high net worth individuals who've been on the sidelines. To put this into perspective, recall how the ASX approval of spot ETFs last year sparked a surge in inflows. We're talking billions funnel into the ecosystem almost overnight. Now, with ASIC stepping up its game by classifying the majority of digital assets as financial products and acquiring full licensing by June 2026, the landscape is transitioning from a somewhat unregulated frontier to a more structured, investor-friendly environment. This regulatory clarity is crucial. It protects everyday retail investors from the pitfalls we've seen in the past, where encouraging bigger players to commit. In Melbourne, specifically, I've spoken with numerous locals who have integrated crypto into their self-managed super funds, SMSF, with adoption rates climbing by 20% in the third quarter alone. Platforms like Coinly are making tax reporting a breeze, turning what used to be a nightmare into a straightforward process. Take, for instance, a friend of mine in Fitzroy who shifted 10% of his super into Bitcoin last year. He's not just riding the waves, but using tools like automated tax calculators to stay compliant without stress. But it's not all smooth sailing. Recent headlines highlighted the ongoing battle against scams and illicit activities. Just this week, Queensland Police charged 4 individuals over an alleged 1.5 million crypto investment scam involving cold calls and fake promises of high returns. This comes on the heels of Austrac's crackdown on crypto ATMs, finding operators like CryPTOLIC for non-compliance in anti-money laundering protocols. These actions underscore the regulators' push for broader oversight, with new licensing regimes set to roll out that could encompass everything from exchanges to DeFi platforms. On the innovation front, Melbourne's blockchain ecosystem are thriving. We're seeing pilots for cross-border payments linking Australian banks with counterparts in Brazil and Asia. Leveraging our strategic position in the APAC region to reduce transaction times and costs dramatically. Trends-wise, Binance Australia's data shows Aussies aren't merely speculating, they're increasingly hodling long-term with SMSF integrations leading the charge. Block Earner, after navigating regulatory hurdles, is pioneering Bitcoin-backed home loans, allowing users to collateralize their holdings for real-world assets like property purchases in suburban areas. This blend of finance and crypto is revolutionary, potentially unlocking trillions in locked-up value. How does all this impact the local landscape? Increased liquidity means narrower spreads, reducing market manipulation risks, and greater participation from everyday Aussies. For those in Victoria, it's an opportunity to get ahead, whether you're a trader, monitoring ASX listings, or a newbie exploring ETF options. But a word of caution. With BTC's recent dip, timing is everything. This could be the catalyst for a local inflow surge. If you're based in Melbourne or elsewhere in Oz, how are these changes affecting your strategy? Share in the comments as we transition to the bigger picture. Now that we've got a solid grasp on the Aussie scene, let's expand our view to the global arena where the crypto markets are interconnected in ways that ripple directly back to us down under. The worldwide ecosystem is a complex web, and today's movements are a perfect illustration of that dynamism. Starting with the king itself, Bitcoin. As of this afternoon, BTC is trading at approximately 153,000, marking a 6.4% decline over the past 24 hours and slipping below the psychologically important 154 level, equivalent to that much discussed 100,000 US threshold. This pullback isn't isolated. It's part of a broader market correction, with the total crypto market cap contracting to around $5.5 trillion Australian. You're asking, what's driving this? Well, a combination of profit taking after recent highs, uncertainty around upcoming Federal Reserve decisions, and a shift in investor capital towards traditional tech stocks amid economic jitters. Yet, there's optimism baked in. Historical data shows November often delivers strong gains for BTC, averaging 30% post-halving, and experts like FundStrat's Tom Lee are still forecasting a push towards $300,000 by year's end. Globally, the ETF narrative is heating up, mirroring our local developments. While BlackRock's Aussie launch is exciting, in the US, Ethereum ETFs experienced a staggering 338 million in outflows yesterday alone, with BlackRock contributing 171 million to that exodus. Ethereum itself is hovering at 4,928, down 2%, as altcoins struggle to keep pace. Take TON, TON, at $2.97, down to its support levels, or Solana around $277, showing signs of a double bottom formation, but still vulnerable in this risk-off environment. Shifting to policy, US Senator Cynthia Lummis is making waves with her proposal for a national Bitcoin strategic reserve aimed at addressing the mounting debt crisis. Envision holding 1 million Bitcoin in government coffers, which could provide a permanent floor for prices and accelerate mainstream adoption. In Canada, regulators are finalising stable coins frameworks for 2025, while in Europe, Poland's parliamentarians are diving into educational resources like the Bitcoin standard, signalling a growing political embrace. On the partnership and innovation side, Consensus is gearing up for a 2026 IPO backed by heavyweights like JP Morgan and Goldman Sachs, positioning Ethereum's enterprise solutions for public markets, a move that could validate the tech for skeptics. Mining giant Canaan secured 111 million in funding for new rigs, hinting at a hardware renaissance as efficiency demands rise. In DeFi, Hong Kong's TFI Super App is rolling out integrated tools for seamless cross-border operations, blending wallets, exchanges, and more into one platform. However, bearish pressures persist. Leverage liquidations in altcoins are rampant. XRP down 6% amid wild activity, and overall sentiment dipping into extreme fear territory per fear and greed indexes. Bitcoin slide into bear market status, down 21% from October peaks, has analysts debating if this is a healthy correction or the start of something deeper. Connecting this back home, Australia's ETF pushes perfectly timed to capitalise on global trends, potentially offsetting US outflows with fresh APAC inflows. 4. Melbourne based traders. This means opportunities in arbitrage and diversified portfolios amid the chop. I am personally eyeing SATs accumulation during these dips. What about you? As we move forward, let's dissect these elements even further. Time to roll up our sleeves and really dig into the meat of these developments, because understanding the why and the what ifs is where the true value lies in crypto. Let's start with BlackRock's ASX ETF. This isn't a minor addition, it's a potential liquidity tsunami. In the US, the ETF amassed over 46 billion in AUM. Replicating even a fraction here could explode local volumes. Pros include simplified access for SMSF investors, no more wrestling with private keys or custody issues, and a projected 15 to 20% boost in institutional participation. On the flip side, higher competition might pressure smaller ETFs, fees, and viability. And if Bitcoin lingers below 154,000, initial enthusiasm could wane. Locally, this correlates markets more tightly with global BTC, but Australia's robust regs could dampen extreme volatility. Globally, it's a chain reaction. Anticipate accelerated ETF approvals in Europe and Asia, pushing aggregate AUM beyond 154 billion by early 2026. That 154,000 BTC breach? From a technical standpoint, it's flashing capitulation signals. RSI at an oversold 35, MACD hinting at a bullish crossover, and on-chain metrics from Glassnode showing whale buying sprees at these levels. Macro factors like Fed policy tightness could cap rebounds until potential December rate cuts, but parallel to past cycles, example, the 2021's mid-year dip suggests a strong Q4 recovery. For altcoins, the pain is amplified. Sol's funding rates have tanked, indicating short-term seller dominance, while TLN risks further downside below $2.87 Australian. Loomis's reserve plan, if enacted, it could establish 5 to 10% price floor through sustained government purchases, though political gridlock in Congress adds uncertainty. Consider stakeholder views. Bulls see it as validation. Bears warn of centralisation risks. In Australia, with ETF wins at our back, we're somewhat buffered, expect a local premium during rebounds. But volatility remains. The entry fee for this freedom, strategies like stablecoin hedging, example USDC, can mitigate. Broader implication? This dip accelerates the narrative shift from speculation to strategic asset, boosting blockchain jobs in Melbourne by 25% YOY and fostering innovations like tokenized real estate. Alternative scenarios. If sentiment flips bullish, we could see $200,000 Bitcoin by Christmas. Conversely, prolonged macros wows might test 120,000 supports. What's your take? Opportunity or caution? Let's brainstorm in the comments. Let's get on to the educational segments now. Level up your crypto game. So before we geek out the details, a quick but important reminder. I'm sharing my passion and knowledge here, but this is absolutely no financial advice. I'm not an advisor. Always do your own research. Consult professionals if needed. And remember, crypto involves significant risks alongside its rewards. Yeah, so hopefully you got that. Yeah, great. Let's build your toolkit. Kicking off with Bitcoin basics. At its essence, Bitcoin is a decentralized peer-to-peer digital currency powered by blockchain, an immutable ledger where transactions are verified through proof of work mining. Miners compete to solve complex mathematical puzzles, adding blocks roughly every 10 minutes and securing the network with immense computational power, currently over 1 exahash per second. Its scarcity is key. Capped at 21 million coins, it mimics gold's supply dynamics, driving value through halvings that reduce new issuance every 4 years. That recent Melbourne market dip, it's echoing the 2024 halvings supply squeeze, creating upward pressure over time despite short-term volatility. Diving deeper, understand concepts like mempool, pending transactions, or SegWit, upgrades that enhance scalability. Moving to investment strategies, again, not an advice, dollar costing averaging or DCA is a powerhouse approach. Commit a fixed amount like $50 weekly into BTC via user-friendly apps. This averages out costs over time, reducing the impact of volatility. Portfolio diversification. Consider a balanced mix. 60% in Bitcoin, ETH for stability, 20% in promising alts like Sol for growth potential, and 20% in stables for liquidity. Monitor key indicators. Tools like Glassnode reveal whale movements, while free dashboards on Dune Analytics track on-chain activity. Now, this is a real example. During past dips, consistent DCAs outperformed lump sum buyers by 15 to 20% over cycles. On the protection front, scams are a persistent threat, from phishing sites mimicking legit ETFs to pump and dump schemes. Always verify URLs, use reputable exchanges, and enable two-factor authentication or 2FA across all accounts. Hardware wallets like Ledger or Trezor. Keep your keys offline, away from hacks. For reporting, leverage ASIC's ScamWatch portal to flag suspicious activity. Some pro tips: never share private keys or seed phrases, and audit smart contracts before interacting with DeFi. If you're holding in an SMSF, ensure compliance with ATA guidelines to avoid penalties. For more info or news updates on these topics, head over to CRYPTOLOGIC.com.au. It's packed with practical guides and regulatory insights. What's one takeaway you're applying today? Let me know below. Incorporate passion, my Bitcoin manifesto. As we Near the end of this deep dive, I need to pause and share something profoundly personal. Bitcoin and crypto didn't just change my portfolio, they transformed my worldview. In a system dominated by centralized powers and endless fees, discovering this decentralized alternative was like finding a key to true independence. I recall the early struggles, late nights, troubleshooting wallets, the thrill of my first transaction confirming on the blockchain, and the lessons from market crashes that built resilience. I firmly believe crypto is the catalyst for global change. It democratizes finance, empowers the unbanked in remote areas, slashes remittance costs for families worldwide, and sparks innovations from NFTs in an art to DIYs in governance. Here in Australia, it's bridging gaps between urban hubs like Melbourne and rural communities, fostering economic inclusion. Through everyday dip and surge, hold on to this. We're not speculators. We are architects of a fairer future. What's your core why in this space? Share it. Let's inspire each other. Wrapping up, a quick nod to cryptologic.com.au. For more info and news updates, it's your go-to spot for comprehensive crypto coverage. You legends have made this session epic. Hit like if the joke cracked you up. Subscribe to catch the next video whenever it drops, and share it with a friend who's crypto curious. Let's keep the convo going. From the poll, 65% are bullish on the ETF. You? Post your questions. Top ones get featured in the next video. From Melbourne, with passion, stay empowered, keep stacking, and see you in the blockchain.